part of the show where I talk about 3 things that I'm watching that I think all of you should be keeping an eye on before you make your investment decisions over the next couple of weeks. First one I wanted to point out, Nvidia earnings. Why do I talk about Nvidia all the time? It is the largest company in the world today by a fair bit. You know, you're talking about a $5 trillion company, one company that makes up almost 10% of the total S&P 500. 10%, one company, unheard of. We've never seen one company this large before. Even the days of Apple, when Apple was and still is a $4 trillion company, it's nowhere near 5 trillion Nvidia. Nvidia earnings are going to come out next week. It's definitely going to be a market mover. Buy the dip mentality. Yes, when markets pull back, it's an opportunity to buy the dip. Buy good quality investments that have fallen for reasons that perhaps maybe you don't agree with, or maybe reasons are not necessarily valid. The market has gotten it wrong, perhaps. It happens all the time. Buy the dip mentality. Stay diversified. Don't keep investing in the hot area, which has been tech, even with the market breadth shrinking as of late. And what I mean by that, market breadth shrinking, we seem to be, tech seems to be more and more the focus. Tech seems to be more and more the leader. Although, yes, I'm gonna talk about pharmaceuticals. Strangely enough, pharmaceuticals have recently surged into tech territory and have moved significantly higher. So you want to stay diversified, and we're going to talk a bit about that. So let's move on with our first topic, which is Nvidia and Nvidia earnings. Our first chart we can pull up is one on Nvidia, and you're going to see that Nvidia has definitely moved from the bottom left to the top right, again off the lows in April. As I mentioned, it is the largest company in the world. It is the dominant player, chip creator in the world. CEO Jensen Huang has been all over the world with President Trump, and they've been offering Nvidia's chips to different countries, UAE, Saudi Arabia, in the Middle East, places in the Middle East, places in Europe, all over the world. And probably the only place right now that is having difficulty getting access to Nvidia's best quality chips is China. And that's why China and the US are having a bit of a trade war between the two right now. But most recently, we're hoping that with the recent meeting between the two leaders of the US and China, that that is hopefully going to at least subside for the time being. Our next chart talks about Nvidia, and it compares it to the other Mag 7 names. So the other 6 names out of the Mag 7. And you'll see here, Nvidia's bull run leaves the Mag 7 far behind. And the red line is Nvidia, and all the other lines are the other Mag 7, Alphabet, Tesla, Meta, Microsoft, Apple, and Amazon. You can see how much over the last, let's call it 5 years, Nvidia has moved higher as compared to the other Mag 7 names. So Nvidia earnings coming out, I believe, November the 19th. Circle that on your calendar. It will come out after the market closes, somewhere around 4:30 p.m. Definitely going to be a market mover. It's going to affect tech stocks, chip stocks. It's going to affect the whole stock market in general, and you should pay attention to the numbers. Our next topic that I wanted to discuss of our top 3 is the buy the dip mentality. And when I talk about buying the dip, it just doesn't mean buying any dip in the market or a dip in a stock. You have to know when to buy into the dip. Some people would say it's like catching a falling knife. It's not easy to do. Some people buy in when something falls only to see it fall further. Some people wait too long before they buy in, and then the stock or the market goes right back up. And unfortunately, you miss that opportunity. Our first chart actually shows what it means to buy the dip. And you'll see in a second, we'll put it up. But there it is. Yeah, buying the dip would be, yeah, some people would say it's kind of market timing. And I don't like to time market. So what I always say is buy good quality investments. If the investment makes sense, if it makes sense for today's environment, and if it's a good value, has a good story behind it, good management, pays a dividend perhaps, or perhaps not, depending on what you're buying the investment for. If that investment were to fall, you would buy it. You wouldn't want to wait to see if it goes down further. If it represents good value, you buy it. And some people would say buy the dip. Well, yeah, I guess it's buying the dip because you are buying it at a cheaper price, but you're just not sure if it's going to go a little lower before it goes higher or not. Our next chart shows exactly that. Buying this dip doesn't work as well if you were to buy it on the left-hand side, nor did this one when it kept going down. But as you can see on the right-hand side, buying the dip did work there. And yeah, this chart is, I guess, not realistic in that very difficult to buy at the low. Very few people do it. I would tell you it's pretty lucky. Not many people can buy right at the low point for a stock or an investment idea. Most people will buy in at some point on the way down or the way up. But as long as you buy at good valuations, that is the most important thing. Wanted to show a couple of stock ideas for us today. Our first chart here is on Dell Technology. And Dell, most of you will recognize Dell Computers. They're a lot more than that right now. They're very much an AI play or an investment in AI. They have servers, storage, AI. They also are putting AI into their computers. So they're very much tied to the AI world. They have Michael Dell, CEO of Dell, chairman, basically has, if you look at some of the speeches that the CEO of Nvidia has made recently, Michael Dell's in the front row. They have a great relationship and very quick to getting Nvidia chips. And so when Dell has fallen recently about 15% from their highs, trading at around 14 times earnings, I think it's an opportunity. Would you say buy the dip here? I would say yes. Could it fall further? Possibly. But I think Dell is a name that you could buy at 14 times earnings, down from the 160s, almost 170 area. Today, trading at less than 140. I think it's up today when we came on the air. So I think buying Dell would be an example of buying a stock that has dipped a little bit and an opportunity for many investors. Our next chart, and before I came on air, I know an investor of mine asked me about Meta, and we have a chart about Meta. Meta today is down about 23% from its high. Used to be $796 stock. Today, trading at around $610. So it's down another $17 today when we came on the air. Down about almost 25% from the highs. Trading at around 24 times forward earnings. Is that an opportunity for a name like Meta? Absolutely, in my opinion. If you can handle the risk that a name like Meta brings to a portfolio, if you can handle the volatility, can handle the risk, I think Meta is a name you look at because it has come down so much in a very short period of time for reasons that I don't even think are that valid. They took a one-time hit, a tax hit when they reported earnings, and they actually reported that they're going to increase the amount of money they're spending on AI, and the market looked at that as a negative, that they're spending too much, that maybe they're not making as much from AI as profitable as they'd like to be, at least at this point in time, and they just keep spending more and more money. So it was a spending issue, it was a tax issue, but the business of Meta's business, underlying business, is as strong as it's ever been, and it's been an investment idea that I know many people have bought recently. Third topic for our show today of the top 3 things that I think you should be focused on before you make your investment decisions is this idea of, are you diversified? Don't chase the hot stock. Don't continue to buy tech. And I get questions all the time, Allan, why are we owning these pharmaceutical stocks which have done nothing this past year? Names like Regeneron, Bristol Myers, and others, Merck, Pfizer, why do we own them? Well, in some cases, you own them for the dividend that they produce. Many of those names, like Pfizer, produced and has produced a dividend of over 6% for quite some time. And that dividend has been relatively stable. But you own pharmaceuticals, you own industrial names, you own some of the retail names, you own perhaps some utilities, banking, etc., for diversification, because you never know what part of the market is going to move higher in any given year. Our first chart, and I think our only chart for this segment, clearly shows this. And if I had a favorite chart for the show today, this would be it. All the different colors represent different sectors that have topped the S&P 500 in any given year. I know it's hard for you to see, but going from right to left, year to date, we have the blue, which is the S&P 500 Communication Services Index. These are your Googles, your Metas, and all that, Amazons. And you can see last year it was number one. Information technology, again, tech, but a different part of tech. That was in 2023. Energy in 21 and 22. Information technology again in 19 and 20. And you can see it goes on and on. Healthcare, pharma, 2018 had a great year. It was the leader. And the white is the S&P 500 for that year. How much the S&P 500 so went higher. So you can see how many sectors did better than the S&P 500 overall average. Perhaps that's a something to consider. Instead of buying the index, you probably want to build a nice diversified portfolio of individual stocks. And this is why. Look how many sectors have outperformed the S&P in any given year. So is it going to be pharma? Is it going to be real estate like it was all the way back in 2014? Is it going to be consumer discretionary names like it was in 2015 and 2013? All the time, the sectors will go up and go down. And in any given year, you want to stay diversified because you just don't know when which sector is going to lead. And that's why you stay diversified. At the same token, you don't know which sector is going to go down. In the spring of this year, technology actually took the biggest hit, the largest hit of all the sectors. But since then, obviously, technology has been, along with pharmaceuticals, as I said now, most recently, the two sectors that have led us back, along with banking and financials as a whole. So stay diversified is definitely key to building a portfolio. Staying diversified, diversification in general is the best way and the cheapest way to protect your portfolio. That idea, along with consider buying the dips if they make sense, and the big Nvidia earnings that will come out in about a week's time or just under a week's time, those are the three main things that I believe individual investors should be focusing on.